Good morning, everybody, or good afternoon, and welcome to today's webinar, Top 6 Ways to Originate More Business in Today's Market. We're very excited to share some great content with you. Now, as questions come up, please go ahead and use the questions tab that's located within the tool, and we'll go ahead and ask the questions to the speakers at that point. We want it to be as engaging as possible, so please feel free to step in and ask questions as they come up. With that, I will turn it over to today's speakers. Take it away, Rob.
Thank you very much, Rose, and good morning, good afternoon, good day, everyone, depending on what part of the country you're from. My name's Rob Taco. I'm the regional manager here in New England, Mid-Atlantic regions, and let me turn it over to Janice to introduce herself as another panelist.
Hi everyone, thanks for joining. My name is Janice and I'm an account executive at Lensher, and I'm at the corporate office in San Diego, California.
Awesome. Nicole?
Hi everyone, my name is Nicole Truppi and I am the Northeast Regional Operations Manager at Lensher. Very excited to be joining you all again today, go over some tricky properties that you might see, get those creative juices flowing again.
All right.
All right, so let's get right to it. So the fourth section, this is part 2 of the 6 ways to originate more business in today's market. And this section is about foreign nationals. So how do we tap into the booming foreign national market? Foreign national programs do not have to be overly complex. We want you to become a resource for these referrals when discussing with your realtor partners. So the moment you say no, you're not only pushing away that borrower, but also future business. And our goal is to help guide you through this program for more potential customers in your area to become a go-to for foreign nationals. So going right to the next slide, foreign nationals, who are they and who are they not? So foreign nationals are not US citizens, nor are they permanent resident aliens. Permanent resident aliens have a green card and they do fall into the US category status. A non-permanent resident alien typically has a work visa, also known as an employment authorization document, where they are allowed to live and work in the US. Foreign nationals live and work in a foreign country and therefore have no status in the United States. This is an untapped market, foreign national market. Many of these borrowers pay cash because they're unaware that they can even obtain financing opportunities. So with that, let's look at some stats on foreign national buyers. Just to call out here, I think what really jumps off the page here is 84,600 foreign national buyers annually. That's a significant market, folks. So from April of 2022 to March of 2023, this number is a little bit dated, but $53.3 billion in annual purchase volume. Significant amount. And 8% of these borrowers buy homes greater than $1 million. I know that really is probably getting your attention. It certainly gets mine. And you'll see that the median purchase price compared to all US homes sold in the United States is higher. It's about $396,400 for the median purchase price for a foreign national versus all other types of borrowers.
Yeah, Rob, Rob is right, and there's a lot of statistics that we can share with you. You might be wondering, well, where are these foreign national borrowers from typically, right? And we have some stats here. You know, China, Mexico, Canada, India, Colombia are like our top 5 on the list. And we get these calls all the time. I've closed a lot of foreign national loans, and I'm from Mexico. So a lot of times people don't realize, you know, even family members, friends, like this is kind of where you can start thinking. They don't know they can get financing. You know, they're like, oh, I guess if I want to buy a place in the United States, I have to pay cash. And many are used to that. So this is a great opportunity for you to go, hey, guess what? You don't have to pay cash. You can get financing, right? And it's not a very complex loan, to be honest. It can be quite simple. And we can even do delayed financing. So did they already pay cash? Well, you know, how long ago did they close? Because we could even do a delayed purchase or a cash out refi. So there's a lot of really cool things we can do with foreign nationals, and people just don't know about it. So you could be their expert, and by that you just call us and we'll help you.
Janice, Bethany wants to know what's the down payment, or what's the maximum LTV will go with a foreign national loan?
That's a great question, Stephanie. So it's going to depend on if you're using an income letter to buy the property. So if we're using income, we do require 35% down. So that would apply for a second home or investment property that requires income. But we also have our debt service coverage ratio program for foreign nationals, which would just be the rental income from the property. And then we just increased our LTV, so 25% down is the minimum.
Okay, great. And finding referral sources and prospects. In a little bit, I'll show you guys a private label marketing kit that I put together for you guys with flyers and email templates and even a slide deck that you can use to really promote this program and let people know that this is something that you're offering. But a great way to put your name out there is to go ahead and reach out to people. Look for international real estate attorneys in your area. So I would do like international real estate attorneys in San Diego. That's a great source of income because they're working with these people. International tax attorneys in your area. Real estate agents in for foreign borrowers. I know that there used to be the little printed things with all the properties, and you would see a bunch of them in a foreign language. That's a great cue that the realtor works with foreign buyers. So that's somebody that would be great. CPAs and immigration lawyers in your area. Facebook now is a fantastic place to find all of these prospects, and you can start connecting with them. Also connect with groups like NARA, National Association of Hispanic Real Estate Professionals, or ARIA, Asian Real Estate Association of America. Those are other great sources for foreign buyers. This is the resource kit that I told you about. Look for an email from me in about an hour after the webinar ends, and you're going to get a link to this. But these flyers, you can download them, and you can put your logo on them. You can put your contact info, and you can start reaching out to these people right away. There's even banners for social media and email templates, so you can start messaging people right away.
Okay, so part 5, or the next segment that we're going to talk about, is building strong relationships with realtors by helping them make winning offers. So what we mean here is home buyers need a competitive advantage to stand out, especially if it comes down to a bidding war. And one of the solutions that LendSure offers is our Boost Bridge loan that we're going to talk a little bit about in this segment. And what does that stand for? We recently rebranded this bridge loan called the Boost Bridge Loan. There's a lot of definitions for a bridge loan. When some people hear the term bridge, they think of perhaps a fix and flip loan, they think of a private money loan, but for us, it is a bridge loan to help them purchase another property without selling their departing primary first. And let me just define that. The Boost stands for Bridge Option Offering a Seamless Transition. So with that, Rose, let's go to the next slide.
Sure, we got a couple of quick questions before that. Jason wants to know how we verify credit for the foreign national things. Do they need a FICO score?
No, they don't. Actually, we don't require a U.S. Credit score. And we actually can do credit 2 different ways. So a lot of countries do have their own credit bureau. So for example, I mentioned I do a lot of foreign national loans for Mexican borrowers, and they do have a Buró de Crédito Especial, which we accept. Canada has their own, and I've seen other countries as well have their own credit report. So that's one option. And the second option is if that country does not have a credit bureau, we just get 3 alternative trade line letters that meet our requirements, and you're done.
Okay, and then we have a question about reserve requirements. What are the reserve requirements, and do those reserve requirements have to be in US dollars?
That's a great question too. I believe that reserve requirements are 12 months, and the money does not have to be moved into the United States if it's the reserves. We will source and season the funds in the country of origin, and the money that is going to be used for the down payment and closing costs do have to move to a United States domiciled bank account. However, reserves can stay in their bank account in their country.
Got it. All right. Thanks.
All right. And like Rob was just talking about, our Boost program is a short-term financing option designed to allow borrowers to bridge the gap between selling their own home and buying a new one. So the key word that we just mentioned is bridge, very similar to conventional bridge loans, where we allow a cash out refi on the borrower's exiting primary to tap into the equity prior to selling that property, allowing them to purchase a new property. So something that's important to mention is that we will allow a boost or a bridge loan on a primary residence as well as a second home or investment property. That definitely sets us aside from competition. And it really just allows the ease of buying a new property, right? The borrowers have the ability to calmly, we all know closing days can get a little frantic, calmly purchase the new property, maybe paint it, make some renovations, move in when they would like to, move all of their stuff with the movers, and then in the exiting primary, then freshen that up a little bit to sell that for top dollar. Now, this is a temporary finance. It is typically paid off within 6 to 12 months, but it does just give our borrowers a little bit more ability and time to get into the new property by utilizing their current property's equity.
Okay. And Sheila wants to know what the monthly payments are on the bridge financing.
Yeah, so something else that is different from us is that we have a balloon payment, and they do not make principal and interest payments throughout the term. They just make the balloon payoff once that is done.
That's basic. Sorry, it's no monthly payments. I'm sorry, I get too excited. I have to say no monthly payments on the departure. It's amazing. And we have more slides to go through that, but I just, sorry, Nick, I had to interrupt you because zero.
Yeah, so zero for them to actually pay, but also zero to qualify. That is
That's right.
also just as big, as Janice mentioned. So not only does the borrower not pay for it, but we don't take the bridge loan payment into consideration when we're calculating DTI. So even if conventionally a borrower has said, no, I didn't qualify for a bridge, please let's see if Boost will work for them because we do qualify differently.
Okay.
All right, so we just covered that, all three of those topics on this slide. So I think we're done with this slide, but no, but seriously, the Boost loan, the bridge loan it resonates with realtors. This is a great conversation starter. It's my favorite product, and here's why. The three big reasons, Janice and Nicole already touched upon them. No DTI issues. So Lensher's Boost loan will pay off any liens on the departure property, plus cash out needed for down payment funds on the new purchase, without impacting the DTI on the new purchase. So the payment for the bridge loan does not go into the DTI on the new purchase. That's huge, okay? So unlike traditional bridge loans, and I'll give you an example, a HELOC or a HELOAN, if that was used to unlock equity for the down payment money, these loan payments must be included in the new purchase DTI. Our Boost loan has no payments for 12 months, okay? And then last but not least, and probably the most interesting thing or exciting thing that realtors want to hear about is this gives your clients a competitive advantage, like I was talking about when we opened up this segment, to make a non-contingent offer. This allows the buyer to have a compelling offer to compete with the cash buyer. This gives them a higher chance of winning a bidding war. So it not only increases their buying power. Why does it increase their buying power? Because that bridge loan on that departing primary does not go into the DTI on the purchase, but it also helps the customers win the bid. So that's huge.
Yeah, Rob, the feedback that I hear the most of, I'm the marketing manager, is about the non-contingent offer. That one is changing lives because right now in today's market with low inventory, that makes a huge, huge difference.
Yeah, and I think Nicole touched upon it too as well. It really stops the time clock, Rose. That property does not have to be sold quickly or hastily, or what we sometimes consider in a fire sale, to be done very, very quickly to coincide with the settlement date of the first purchase, the new purchase money. So stopping the time clock's huge, takes away a lot of anxiety and stress and personal belongings being on a truck, until you close on the new loan.
And Joanna wants to know if it has to be primary to primary, or investment to investment property.
No, it can be investment to investment. We can also do a boost loan on a second home as well. Those are just at lower LTVs, but we absolutely can do that. So on a second home or an investment property, we'll go to 60 LTV, and on a primary that's for sale to another primary, we'll go to 75 LTV on that departing primary. So we absolutely, there's a lot of flexibility on these programs.
I had one fund once that was a primary bridge loan purchase in a primary, and they had so much equity, they also purchased an investment property all at the same time.
Yeah,
so
that's awesome.
There, just like you said, there's a lot of flexibility, so a lot of ways to structure it. I would say if you have any questions, contact your account executive, because they'll help you think of cool ways to structure these. There's a lot of different ways to skin the cat, I guess.
And I think Janice is going to get into it, Rose, next. But you know, the only caveat is we need to do both loans, right? We need to do the boost loan, the cash out refi on the departure primary, and also the purchase money as well.
Yeah, there you go, Pedro. That answers your question about having to do both loans with LendSure.
Right. You know, right now what we're seeing is very different from maybe other years, right? We have a lot of equity, right? Home to value ratios are around 49% right now. So this loan we've seen increase in demand significantly this year. I've always been a huge fan of it, and I've closed a lot of bridge loans before, but and all honestly, we are seeing an uptick, and so that's really an opportunity. If you're seeing this market grow, it's like, if you haven't closed a bridge loan with LendSure, it's only a matter of time, right? So, but anyway, with the current way things are, the rates are higher, the real estate market is still strong because inventories, you know, there's demand, but there's short inventory. So like we all touched upon, removing that contingency is really going to give them power. It's going to increase your real estate agent's ability to get their buyer a house, you know, an offer accepted. And it's really just, it's going to unlock a lot of opportunities. So this is just one of the many reasons why the boost loan is going to help a lot of buyers. We even like to say every for sale sign is a potential bridge loan, because they're selling and where are they going, right? Sometimes they're looking to buy somewhere else and their offer is not being accepted because they are contingent. So that's, you know, knock on a door and go, hey, I've noticed your house has been on the market for 60 days. Why? How can I help you? Maybe they need a boost loan, right? Boost them into their new house.
Yeah, and another piece of feedback that I hear a lot is about referral business, because you get work with a real estate agent on this one. You know that they're going to go to all of their sellers and say, hey, you know, look at this program. This can give you the time to, sellers and buyers give you the time that you need to get the highest price for your primary residence. Oh, there you go.
There it is, highest price possible. Well, you know, this loan does have a cost, right? It is a 12-month for owner-occupied balloon, or 6-month if it's an investment property. But this is going to empower your real estate agent to negotiate, take more offers than if they're in a panic, where, like Rob mentioned, the fire sale situation that could happen, right? So it really is an opportunity for you to get in there, impress the real estate agent, and get referrals and things like that. So it's going to really stop the time. We've already kind of covered everything on this slide, but anyway, I digress. It is an amazing program.
Yeah, so advantages to realtors and talking points. As I mentioned, I enjoy talking about the Boost Bridge loan because it's a great conversation starter with realtors. You know, they might have cold leads in their pipeline. They could have had a pipeline of customers last year where this product would solve that. This product allows the realtors to revisit those leads with a possible bridge loan. This is a relationship product. They may have buyers who couldn't make a move last year without selling their current home first. So many of those buyers stopped the process because they couldn't win the bid. They became complacent. Their offers were passed over. They might not have even been considered because of the contingency to sell their departing primary. The Boost Bridge loan eliminates that. We talked about that, right? And also rates being too high. Last year, rates climbed up dramatically, very quickly as well. And that could be another possible reason why they became uninterested in making offers. So, you know, the bridge loan unlocks that buyer's equity. Buy before you sell. There's 12 months that borrowers have time to, you know, to do paint and paper and things of that nature to, you know, upgrade their house to get the highest offer possible. And this bridge loan can be used for cash out for home repairs and also to consolidate debt, right, to help on the DTI and the new purchase money. So, and then the biggest reason, make your buyer a non-contingent buyer in 48 hours. That is the biggest reason. And why do we say 48 hours? Because that's all we need to do a pre-approval for the bridge loan. So they can make a non-contingent offer. Okay, so let's just talk about some of the bridge terms. This particular example would be on a primary residence bridge loan, cash out refi, fixed rate, 9.25%. Again, 12-month balloon, no payments. So there's no payments, but interest is accruing. So when that loan is paid off, it'll be paid off with interest as well accruing until the end of the term. I mentioned 75 LTV previously already. That would be on a primary residence. And again, I also mentioned that the one caveat is that LendSure handles and originates both the bridge loan and the purchase transaction. And potentially you as a broker could get 3 loans out of this, right? You could get a bridge loan, the purchase transaction, and let's say they sell that bridge property and they have quite a bit of equity. And they want to perhaps put that down on the purchase money. You know, what I would recommend is that, you know, that borrower, once the EPO period has expired, you could possibly take them conventionally for a shorter term, possibly a lower rate and a lesser loan amount as well if they wanted to put down a large principal reduction and refinance it. So that could be a possible third transaction. But again, that should be after the EPO period expires, right? And then last but not least, LendSure charges 2 points on the bridge loan, and you as the broker can charge 2 points on the purchase money. And the purchase money, again, it's a one payment loan, folks. So the only payment they're making on these 2 loans is on the new purchase transaction. And therefore the DTI can go as high as 50%, which allows them a lot more purchasing power, not counting that cash out refi bridge loan into that new DTI on the new purchase. And we can even use, in some cases, that bridge loan to pay off debt to further help them qualify on the new purchase money, to further help with purchasing power. So with that, I'll take a pause right there, Rose, before we go to the next slide to see if there's any questions.
No, I think that we've covered everything.
Yeah, great product, a lot of flexibility, very, very popular right now in the market space for all of the reasons that Janice mentioned, still with limited inventory and rates where they're at.
And I know you guys are going to be excited about this. Yes, I put together marketing resources on the Bridge program. These are flyers that you can download. You can put your logo on them. You can start reaching out to your realtor partners right away. We've got email templates, social media banners. You can even put together a lunch and learn for your brokers. And if you want, we can have somebody like Rob or Janice go with you to these presentations. Reach out to your LendSure account executive. They will be more than happy to present this information to your referral sources. Just reach out to your LendSure account executive. Look for the email from me, Rose Waldy, in about an hour, and that's going to contain a link. In addition to, yes, you will get a copy of the slides. It will have a link to the private label resource kit with all of these marketing materials ready for you.
All right, so with that, we're going to go into the 6th and final way to originate more business in today's market, and that's expanding your property types loan. So LendSure, it's not one size fits all. LendSure, we don't just lend on 1 to 4 unit properties. We lend on various different types of properties, condominiums, condotels. We're going to get into that in a minute. I believe Nicole has the next slide, but condominiums today, I think, as you all know, almost every condominium that we see is non-warrantable for one reason or another. It's becoming more and more commonplace. And buyers don't know that until they start getting into the process and that questionnaire is delivered to the lender. So we're going to get into a little bit of that, what makes a condo non-warrantable and how we can help on those types of properties. And really popular, condotels as well. Condotels are becoming very, very popular, especially along the shore on the eastern seaboard. We see a lot in Florida on the Panhandle, just for, that's just one example, but they're very, very popular. And I'm sure they're very popular in your region for any of the audience that's listening. So with that, Rose, let's go to the next slide about condotels.
Yeah, absolutely. And condotels, or also known as condo hotels, are something that you might hear in the market that realtors or even brokers like yourself may be a little intimidated with. We are here to let you know that we have a product and we have experienced staff that deal with these types of properties all the time. So one of the biggest things for the condotel versus just a typical condo is that with a condotel, you typically have a check-in and check-out service. You typically have housekeeping, and your borrowers, as owners of the condotel, typically have the ability to enter into a rent pool, or may have the ability to have the HOA management company rent out their property as well. As Rob mentioned, they are becoming more and more popular. I find that we're seeing them around any type of water, whether it's the ocean shore, we're seeing them in lakes in the Midwest, we're seeing them even around ponds over here in Maine. Major cities are also seeing this, not just the resort areas around the lakes, but they often come with amenities like pools, maybe dockside boats, things of that nature, which is really attractive to your borrowers looking for an investment property, especially short term. These are Airbnb contenders. They're very easily fit into Airbnb, VRBO with that short term rental. So when the borrower themselves are not using the condotel, they place the condo into the hotel's rental program and they make money from it. We are seeing a lot of them in Florida, like Rob mentioned, and we are seeing more and more of them come up into the cities like New York, Boston, Los Angeles, etc.
Okay. What is the the loan amount, the highest loan amount that you can go on a condotel?
Yeah, so most of our max loan amounts are case by case. So depending on the program that the condotel is in, as well as depending on the strengths of the loan, the compensating factors to the borrower, etc. We have done condotels 1.5, I think is the highest that we've done here on the East Coast. I have seen some requests for higher, but again, we can do a condotel in combination with our DSCR program, an investor income qualified, a second home, or even a primary. Again, those really main cities like Orlando, Miami, a condotel is something that our borrowers are looking to get into. Absolutely. So again, going into opportunities, like Rob mentioned, they are likely in your area. You might not have heard of them yet, but you will be seeing a lot more of them. A perfect example is right here in the middle. This would be in Miami-Dade County, so that's southern Florida, where the typical high-end units can be anywhere from 800 to 900 per square foot range. So with that, they're seeing that they may have some hotel components. Again, that check-in desk, the housekeeping, being able to rent it. And with that, we are able to just go on our condo questionnaire, see what the HOA fee is. They indicate that, yes, we can check in. Yes, we have housekeeping services. And then we are okay with that. We close condotels all of the time. We can even do condotels for our non-permanent resident alien borrowers.
Okay.
All right. So something that we do just want to make sure that we're stressing is that a condotel is not a timeshare. So we really kind of already went over the first column of condotels in the loan that we do have available. LendSure at this time does not lend on timeshares. The biggest thing would be the first two bullet points. We kind of already know about this, a timeshare where the owners are typically only allowed 1 or 2 weeks out of the entire year to use the property. And the owners have to choose specifically which week they are going to have the property. And then potentially they can also enter that timeshare into a rent pool, but we don't allow timeshares in any of our products. So this slide's pretty important. As Rose mentioned, you'll be getting the slide, but timeshares are a no-go, but condotels are a yes.
And this is a really good slide to be able to share with your realtor partners to help educate them as well about this new opportunity.
I just want to add, we've seen a lot of beautiful condotels. You know, there's many luxury hotels that have condotels, and on that slide, you know, there's on-site restaurants, lounges, spas, exercise facilities. They really look like a typical hotel, but owners can buy into them and put their units into that rental program. So I just want to add that they're cropping up, and we've seen some beautiful properties.
Kathy wants to know, what about fractional ownership, not a timeshare, fully deeded?
Fractional ownership would definitely be a case-by-case scenario. Again, we're going to look at exactly how that is set up within the condo questionnaire and other condo documents, as well as the compensating factors of the borrower.
Fantastic.
All right, and like Rob said, they are popping up more and more, and also we're seeing condos convert to condotels so that they can offer these services like rent pooling, housekeeping, check-in, because again, short-term rent is definitely on the rise as well. So we are seeing that there is a need and a want for these type of properties. Although we would like to see the square footage at 600 square feet or above. We have made some exceptions, a little under 600 square feet. Once again, that would be compensating factors, but our minimum is typically 600 square feet. We always want a full kitchen, no matter what, full kitchen. Now the stoves can be half of the size of a regular one. We've seen those, but we do need the full kitchen, sink, stove, and fridge. The more it feels like a condo and less like a hotel room, the better. But again, a lot of these are conversions. So they are actual, they used to be hotels or they used to be motels turned into condos and condotels. So each room is now deeded separately. Some of our condotel program guidelines, we will go up to 75% LTV for purchases, 70 for rate and term refinances, and 65% LTV for cash out refinances with a 740 FICO. Now, typically, say 5-10 years ago, if a borrower was purchasing a condotel, they were likely purchasing that in cash. So we say that because we will go up to 65% LTV on a cash out refi, which may give your borrowers that own these condotels outright the ability to do a cash out refi and then maybe reinvest in purchase some additional investment properties. So again, we're always looking for ways to maximize on that one borrower.
And if I could add, Rose, you know, just putting my sales hat on here for a minute, as Nicole mentioned, you know, some hotels are converting into condotels, and when that happens, you might routinely see a unit that's less than 600 square feet. When that happens, please give us a call. We will consider that at a lower LTV. If it's a well-heeled borrower, we will consider that, but reach out to your account executive is what I would stress if it's under 600 square feet, you know, especially with more money down.
Fantastic.
Great.
Well, and speaking of condos, there's also non-warrantable condos that we also lend on. And there's so many reasons why, and we kind of talked about this a little bit earlier, but things kind of are changing. There's a lot of condos that are being classified as non-warrantable, and sometimes you do get those fallouts, right, Rob? They're about to close, they have no idea, and surprise, their condo questionnaire comes in, and there's something there that makes it non-warrantable. So it's a good opportunity for you to know that we have saved many loans because they are non-warrantable condos. There's so many different reasons why that are listed here. It could be something like there's a required membership fee because it's on a country club or golf club. There could be it could end up being operating as a hotel, which would make it a condotel. Pending litigation. I had a loan in Hawaii there was pending litigation on. It was complicated. We had one of our head underwriters review the litigation documents, and we were able to, based on the LTV, make an exception and move forward. So a lot of the times they're so case by case that I always encourage you, get the documentation if you have it, the questionnaire. the details, and we will review case by case. It might sound like, oh no, we can't do that, and all of a sudden we realize, you know, there's a lot of compensating factors, and we reviewed the documents and we end up being able to do this. So, you know, like I said, there's a lot of reasons. I could read the list, but you just know if it's non-warrantable, you let us know the details, and then we'll be able to know if we can lend on it. That's my best advice.
Yeah, typically many brokers, Janice, think, you know, litigation is a non-starter. Oftentimes there's litigation and it could be for like a construction deficiency, but the HOA has already remedied it. They've already fixed it and they've issued a special assessment, and now they're going back to the builder or the developer to get replenished for those funds that they spent out of the HOA. So I think that's a great point to bring up, and we've done some of those as well, and I'm glad you brought up that example.
Yeah, and just like you're talking about there with mine, it was also a structural issue, but it was the facade. And, you know, like you said, the HOA had already actually made a plan, and it wasn't going to impact our unit. And there was a lot of, you know, things that led up to, hey, look, we can take a look at this and get it done. You know, the market opportunities, I think, for condos are huge right now, right? The tight inventory makes condos more desirable. Even purchase price, right? A lot of people aren't going to be able to afford a single family residence at the prices that they're at right now, right? So this is an opportunity for you to go, wow, well, I'm not scared of condos, and who doesn't matter if they're not Fannie Freddie loans, because we have Lensure who's going to help us be able to make it happen, even if it becomes non-warrantable, right? So these are some opportunities. I'm sure, you know, families are fleeing cities in search of more space in the suburbs. But like I said, the affordability of a single family is going to be tough for some people.
We were just talking about this earlier, Janice, about like how in today's lifestyles, people want it. People want a more carefree. People are busy, they're working, they've got school, they've got all this stuff. They don't want to worry about taking care of a lawn or your roof that needs replacing. So more and more condos are becoming a really a preferred way to live.
Right, and a lot of new builds out there too, and then those end up being non-warrantable because of one entity owning all of them. So, you know, the possibilities are endless.
And I think, Janice, you touched upon this. We want to see our own HOA questionnaire, and that questionnaire is out on our website. It's very easy to find under broker resources on lensure.com, and you can download that and have that filled out by the management company. And I'm sure Janice will tell you, we like to see our questionnaire. There's reasons for that. You know, it's not as conservative as some of the questionnaires out there. Isn't that right, Janice?
That's right. And even in the case of, hey, fallout deal, they already paid for a questionnaire, and we want to, you know, we'll take a look at the questionnaire that you have on hand. And I've even had my processor do a processor cert if there's a question missing, to try and help close that deal. So it never hurts to have our questionnaire and just start off with us in the first place, right? If you know that there's something a little iffy about the property already, thinking it's going to be non-warrantable, you might as well grab that questionnaire or ask your account executive to send it to you, and they will.
Exactly.
Okay, great. And then I got a couple of people asking about who their account executive is. If you don't know who your Lensure account executive is, just go ahead and reply to that email that you're going to get from me, Rose Waldy, in about an hour. And then just I'll connect you with your Lensure account executive. I'll look that up for you and set you up.
So yes, opportunity knocks when you are able to offer more types of properties, like 5 to 8 units. Like Rob said at the beginning, we're not limited to just 4 units. We do have a special 5 to 8 unit program. Look, investors are, I mean, I love having investors love you, because then they love us, right? Basically, they always come back and buy more properties. People are always growing their portfolio. And this is an amazing one to go, hey, you know, borrower who I closed an investment property for last year, do you want to expand your portfolio? And I have an opportunity for financing 5 to 8 units. Quick kind of recap on this: loan amounts, 2 million and under are typically our sweet spot on this one. minimum loan amount, I believe, is 400,000 off the top of my head. These are special loans. They are commercial. They are considered commercial in nature, but we are looking for residential 5 to 8 unit properties. It's DSCR, so no income requirements. So you might have a investor with 25 other properties and a very complicated, loan to underwrite, but it doesn't matter because as long as that property cash flows 1.1 is the ratio we're looking for, then they would qualify. Minimum down payments can be 30% on these, which is pretty good actually if you look at the competition. So, and there's no limit of properties that, like I said, the borrower can have finance. Lender can do about 10 of these per borrower, and minimum credit score we are asking for 700, and not for first-time investors. Typically, you want at least a year of investment experience. And if you think about it, really, if you're going to be managing 8 units, you probably want a little bit of previous experience there, right? That could be a lot to take on as a first-time investor. So I do see the logic behind that underwriting guideline, but I love these 5 to 8 units. They do open up conversations with investors that you maybe have closed loans with, or that you're looking to close loans with, because they won't find this kind of financing except with like a commercial lender, and they're probably more difficult to qualify that way. So anyway, I love this program. I've closed several 5 to 8s, and pricing is done by property. So if you have one, get us the property address and a little bit of details on the borrower, and then we can get you accurate pricing.
Okay, and
What
Pedro
exact-
wants.
Oh, go ahead.
That's okay. Pedro wants to know if you can qualify with bank statements for 5 to 8 unit properties.
Not needed, actually. We do these just with DSCR, and Pedro, what's really, really fantastic unit properties, because there are so many units, the cash flow, I haven't seen one not cash flow. Now there could be that one property that happens to happen, and we could also offer interest only and qualify off of the IO payment to help the ratio. So the more units, the easier it is for that thing to cash flow. So you wouldn't need the bank statements. It's even easier.
Okay, fantastic.
Yeah, lots of opportunities and ways to get that debt service coverage ratio to come up. And I was that beautiful property there. What investor would not want to own that? Right?
Yeah, that's true. Oh, and well, speaking of investors and they love to make money. I what investor doesn't. We have an amazing way to qualify your borrower, and we touched upon this last webinar, and I think we got super excited about our short-term rental program. This is with DSCR, with your debt service coverage ratio. We can use short-term rental income to qualify your borrower. So it's really going to be more rental income than a long-term rents will gives anybody. And even if your appraiser doesn't know how to do short-term rental income on the 1007, which we require, we could also allow for an AirDNA report. If you're not familiar with AirDNA, I encourage you to Google it. It's pretty fun, but it's basically analytical data that Airbnb and VVRO, from their statistics, it's pulled into AirDNA, and we will pull a report. And if it meets our requirements, we will use that to cash flow your property, your borrower's property, for short-term rental income. So it really helps, especially because rates are higher than they used to be, as we all know. It really does help with your cash flow on your DSCR, as long as that property is, if it's allowed to be short-term, a short-term rental, because some properties won't be, because they have an HOA, or there's certain laws in that state that prohibit it. So.
Okay.
Yeah, and we talked about some great borrower profiles We talked about some great property types, and I hope you all got the sense that we're not really too scared of the tricky scenarios and the tricky situations. We work with borrowers who have difficulty documenting their income, right? Our self-employed borrowers, our real estate property investors, and we can help you help borrowers that have been turned down by other lenders. LendSure does have comprehensive loan options, and it is designed around our borrower specific needs. We mentioned this last week. No self-employed borrower is the same. They can sell the same exact product and they're going to have different qualifications and, again, just different needs of what they're looking to do. We, and in turn you, can help borrowers who are seeking alternative financing. Like Janice mentioned, DSCR is significantly easier when it comes to documentation and qualifying income than a full doc loan would be. However, we do always have the full doc option. We also have the bank statement qualifying option. So we can introduce you, realtors, borrowers, into brand new loan types and make sure it is tailored and perfect for their situation. But at the end of the day, whether it's a condotel, a warrantable or non-warrantable condo, a 5 to 8 unit, whether we're qualifying off of DSCR, if we're going to use short-term rental, if we're going to use bank statements, we can make common sense lending decisions for creditworthy borrowers. So let's discuss their loan scenario and let's see if LendSure can help you and help you win more business.
Okay. And broker resources. So I just wanted to let you guys know if you want to price out any of these wonderful loans that we talked about today, you can go to our website and just click on the link for Spark. That is our online pricing engine. You can get results in seconds with Spark. Or, of course, you could always reach out to your LendSure account executive and talk about loan scenarios. But if you want to play around with some scenarios and get some pricing and pricing options and program options, this is a quick and easy way to do that.
Yeah, and I'd like to encourage you, if you play with the pricing engine and you don't quite understand what option to choose, or it's giving you a rejection, reach out to your account executive. Sometimes it's as simple as you're $1 over the max loan amount, and we make exceptions all the time, right? So, and this is what we do every day, all day long. So we want to help you. Don't get discouraged if you see something that says rejected, because it could be something really simple. Well, nobody likes rejection, right? But we're really, I love Spark, and it really gives a lot of great details. But when it comes to understanding, sometimes, especially if you're not used to doing that day to day, reach out to your AE.
Absolutely. So a little bit more about Spark. Rob, did you want to talk about this?
Yeah, no, I could talk all day about our website. We have an awesome website. There's a lot of information about how to become a broker is in our website. There's resources and forms, the HOA questionnaire I mentioned, the self-employment questionnaire to accompany a bank statement deal for a self-employed borrower qualifying with bank statements. But above all, there's our pricing engine, which you need no credentials for to be able to run a program through that. You can run your scenario with minimal information. I believe it's exactly 9 characteristics of your scenario, and it'll qualify for many of our programs. On the right-hand side, you'll see, IO programs, 30-year fixed, 5/1 ARM, 10-year IO, many different options, and it'll bring up our Alt-A pricing, our expanded pricing. And one thing that Janice mentioned that is so important, we don't expect you to be subject matter experts with Spark, but we are. So that when you run something through Spark, if you don't get green, and green will come up as approved, you might get yellow, and yellow says, well, that fits, that might need a minor deviation to our underwriting guidelines, but reach out to your account executive and we'll do that loan with a minor underwriting deviation. And I think what Janice's point is, 40% of the loans that we originate have some sort of an exception to our underwriting guidelines. And Spark picks up and has all of our underwriting guidelines and our rates downloaded into it. But when it's out of Spark, for whatever reason, that's when you want to reach out to your account executive, and we'll go through a series of questions about your scenario and let you know why it will fit into our program. And that's a loan we want to see. So you'll get many different options for all of the programs available. Again, as I mentioned, if it does reject it, as Janice mentioned, it'll tell you why. and that's when you want to reach out to your account executive. So, the most important thing is on our website is a plethora of information about all of our programs. If there's something you didn't quite understand today, take a look at our programs out on our website and reach out to your account executive to be explained more. And then last but not least, when you run something through Spark and you want to run it by your account executive, you can even PDF that and download it and email it directly to your account executive and say, hey, Janice, does this look right? I ran it through, I'm not getting green, it's not coming up approved. Can we talk about this? And then Janice will see exactly what you ran, all of the traits of that particular scenario, and then she'll be able to make that phone call with you and talk about how we can get that done. So that's really all I have to say on Spark and our website, but a lot of great information. I hope this was helpful for everyone.
Fantastic. And then we have here the resource kit. So here's the link that you guys are going to get in about an hour. I'm including not only the private label resources, but I'm including the entire non-QM resource kit that has our mastering non-QM white paper. Please feel free to download it and share it with your staff. It's got helpful infographics, which are great for explaining programs like the bridge loan and how it works, and articles that we've written. We've got several articles that we've written for Scotsman Guide that you might find helpful as well. So this is the link. You'll be getting it within an hour. So does anybody else have any questions? I know that we've been asking questions throughout. So if you have any other questions, please share them now. Rob, why don't you take this one? Do we offer financing for mixed use properties?
We do. So again, that's going to be case by case, but we absolutely do offer financing for mixed use properties. We do like to see about 35% down and an experienced investor, very similar to 5 to 8 unit properties. But I would recommend reach out to your account executive and let's review that scenario and all of those borrowers' qualifications, and let's take a look at the property as well.
Okay, great. And yes, you guys are going to get a recording of this webinar that you can rewatch or you can share. Look for the email from me in about an hour. Do we offer ITIN loans?
I was kind of waiting for that question, and we do offer ITIN loans. Again, and I don't mean to say this again, but it is case by case. For ITIN borrowers, we do want to see FICO scores, but we do offer ITIN loans. I believe that's on primary residences only, Janice, is that correct? Pretty sure ITIN is primary residence only.
Yeah, I believe you're right, yeah.
Yep, and I'm pretty sure we can qualify them. In fact, I'm positive we can qualify them either full doc or via bank statements as long as they're established as self-employed. So again, reach out to your account executive on ITIN. I'm surprised that didn't come up earlier when we were talking about foreign nationals, non-permanent resident aliens, and permanent resident aliens.
Okay,
Great
fantastic. Great. All right, with that, if any other questions arise, please feel free to reach out. You can reach out to me by responding to the email that you're going to get in about an hour, or contact your Lenture account executive. Any parting words, Rob?
No, I just hope this was helpful for everyone. And the only thing I would say is if you're not doing non-QM now, or you're really not familiar, or you're a little intimidated by it, reach out to an account executive and let them walk you through some of our programs. We'll be the subject matter expert for you. We'll jump on conference calls with you. And above all, our website is extremely helpful and informative, and you can learn a lot just on our website about all of our programs.
Fantastic. Janice, any parting words?
Well, just thank you for being here. And I agree, if you're not closing non-QM loans, there must be a reason. I do encourage you to get to know the programs and get to know your account executive. We help people every single day. And I'll tell you that my experience, when loan officers help a borrower that thinks they cannot qualify any other way, they're so grateful. They're going to be loyal clients. And my business has grown through my loan officer's referral business. So once you help somebody close one loan, they're gonna tell their mom, they're gonna tell their dad, they're gonna tell their friends, their real estate agent. People are grateful, and this is gonna be a repeat business for you, for us, and it really, I don't know, I couldn't think of anything better to say than we're here to help you, and you're gonna help people. So it's pretty nice.
Fantastic. And Nicole, any parting words?
Yeah, absolutely. So again, just want to say thank you for taking the time to join us on this webinar as well as the webinar last week. I hope that you picked up some great keywords. You are less intimidated by some certain borrowers and some certain property types, and you absolutely pick up business. Wishing you a very successful 2024.
All right, fantastic. Thank you so much for joining us, everyone.
Thank you.
Thank you.
Thank you.